Red days, red days, red days. What to do when SPACs come crashing down? What am I doing in this SPAC crash? That's what we're going to be talking about in today's video. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. So SPACs have come crashing down the past few days from what I believe were somewhat overly optimistic valuations to what are now somewhat below normal valuations. I wouldn't necessarily call this a Black Friday special, but there are some good deals out there. So when I first started getting really into SPACs last year, I was buying many SPAC common stock for under $10 and many SPAC warrants for under $1. Then some major SPAC mania happened and there wasn't one good pre-target SPAC under $10. And many SPAC warrants that would have been trading for around $2 just a few months ago were starting to trade at around $4. Many warrants even opened up on their first day of trading in the past week above $4 and now are trading around $2. And we all know what happened with CCIV going to over $60 on Lucid Motors rumors and crashing back down to $23 on the actual news. So what should you be doing during this SPAC crash? Well, I'm not a financial advisor and I can't tell you what to do with your money, but I'm going to share with you my game plan and what I'm doing with my money. So first of all, have I been buying SPACs on this dip? Yes, I have been buying mostly SPAC warrants. And if you want to know exactly what I've been buying in my Fidelity all SPAC portfolio, check out my Patreon where I share all of my buys and sell alerts in this portfolio. And I've been very active the past few days. I'll leave a link to my Patreon in the video description if you're interested. And I've actually been raising more cash to take advantage of this dip and to have something left in the tank in case there's another leg down. And where have I been raising cash? I've been selling off some of my index fund, which was sitting pretty close to all-time highs. I have a Russell 1000 index fund, which behaves very similarly to the S&P 500, which was a few percentage points off all-time highs. Had that fund not been close to all-time highs, I would not have made this play. My general strategy is to buy low and sell high. And since that fund was at all-time highs and SPACs are making lower lows, it seemed like a no-brainer to me. I'm not saying this is what you should do, but I'm just sharing with you what I did, which may end up being a mistake. But that's a risk that I'm willing to take. So now I even have more cash on the sidelines and I've already deployed some of it. What is next? What I like to do is to try and identify what the worst case scenario looks like. This strategy has worked for me in my long-term portfolios, and I'm adjusting this strategy for my SPAC portfolio. And in my opinion, the worst case scenario for SPACs with good management teams pre-merger are for the common stock to be trading below $9.50 and the warrants to be trading for below 50 cents. The reason I came up with these numbers is because if we rewind to the March 2020 bear market, the lowest I've ever seen a pre-merger SPAC common stock go was $9.15. And the lowest I've ever seen a pre-merger SPAC warrant go was 15 cents. Hyliion warrants hit a low of around 15 cents when they were still trading as Tortoise Acquisition Corp. And around 6 months later, those same warrants went above $23. Imagine if you stuck $1,000 in at 15 cents per warrant, and 6 months later, that would have been worth over $150,000. I don't believe that pre-merger SPACs with good management teams will go that low again this year. But if they do, that's when I plan to deploy my all-in money. We're not at that all-in point yet, but I want to make sure that I'm prepared for it with cash. Right now, I've already made a lot of purchases, and I plan to make a few more purchases on SPACs that have come down heavily from their highs, if they continue to drop in price. But the next time that I plan to go on a huge buying spree is if some of the SPAC warrants that I've been eyeing go to around 75 cents. If they hit 75 cents, you will see me put a lot of buy alerts in my Patreon. And I might even put money into SPAC common stocks if they go to around $9.75. The common stock are a lot safer way to go, but I really like the high rewards that warrants can give, even though they are a lot riskier with expiration and everything. Buying both common stock and warrants are a good way to spread out the risk. Remember that if a SPAC does not pick a target, warrants will go to zero. Warrants do not have any rights to the cash in the trust as common stockholders do. That's why it's so crucial to do your due diligence on the SPAC management team and understand all of the expiration risks if you decide to invest in warrants. I made an entire video on SPAC warrant basics that answers many of the questions about SPAC warrants. Be sure to check that video out if you haven't yet. So right now, I've got approximately $15,000 in cash available in my Fidelity All SPAC portfolio. If we see pre-target SPAC warrants go to 75 cents and SPAC common stocks go to $9.75, my plan is to deploy approximately half of that cash only into the SPACs whose management teams I like. And then, if we see warrants go below 50 cents and common stock go to around $9.50 or lower, that's when I'll deploy the rest of my cash. That's what I consider my all-in SPAC money. At that point, even if things get worse, I'm just gonna wait it out. I would be very tempted to sell more index funds or dip into my emergency fund at that point, but in my opinion, that would just be plain stupid. My index funds are meant to build long-term wealth with a relatively low amount of risk. My emergency fund is meant to put a roof over my family's head and food on our table if there's a true emergency. So if it comes down to my ability to put food on my family's table or try to make money from the stock market, putting food on the table will win every single time. And I'm definitely not gonna borrow money, use margin, or credit cards to buy stocks. Sometimes you can get lucky doing stupid things, but in my opinion, that is just playing with fire. All right, so if you wanna join the best SPAC community on the planet, check out my free Discord. We talk about SPACs and we talk about other stocks. A link is in the video description. We have over 400 members and it's completely free to join. And if you want to know exactly what I'm trading in my Fidelity All SPAC portfolio, check out my Patreon. For $5 a month, you can get all of my buy and sell alerts from that portfolio. There's also access to my private Patreon Discord. If you want additional insights into that portfolio and some of my other long-term portfolios, there's also a higher tier available for that. And if you want to become a super alpha OG and get a shout out on one of my videos every month, I also have a tier for that. So be sure to check out my Patreon if you're interested. A link is in the video description. All right, so let me know how you're handling this SPAC crash. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.